Let's bring in Kingsview Asset Management CIO Scott Martin to try to make sense of all of it. What do you think, Scott?
Let's make some sense of it, Lauren. At least try. Here's the thing. Here's what's good that's happening right now is that the markets are starting to heal, I believe. I mean, Monday was an absolute destructive day, as I've said over the last few weeks, and gotten some ribbing for it, mind you. This was a barf bottom type of day. Monday was, certainly going into Christmas. It really tried to ruin everybody's holidays. And now we're seeing this market really recover nicely. In fact, yesterday, when we had a big sell-off, it looked like it was going to break again. It didn't. It came back. Now, the only thing they'll tell you that's still kind of hanging out there is we need to see some volume come back, because volume has been way more prevalent on the down days than it has the up days. So some conviction buying is, I think, the next leg up here.
And what do you make of gold rallying?
We love gold. We own gold. I kind of feel like gold member here by saying I love gold, like the movie. But the reality is true, though, because gold right now, unlike, say, your bonds, which, yes, have been rallying back as interest rates have come down, but certainly unlike your stocks, have really been that low volatility kind of just get me over the hump trade. And so right now, with the U.S. dollar, in our opinion, kind of maybe peaking out and tending to trend lower here into 2019, I think gold's a great addition to your portfolio if you're looking for something other than, say, just traditional stocks and bonds.
Hey, Scott, how you doing? And congratulations to the Chicago Bears. I think your defense out there is the best I've seen since the '86 Bears. But I want to ask you about gold. If you get into gold, it's usually a safe haven, and most people that get into gold are worried about what's going on in the market. You mentioned healing. It doesn't seem like much has changed. We still have all this unpredictability. Are you bullish going forward?
Yeah, we are bullish here, John, but I think, the interesting thing you have to think about is near term, this volatility is going to stick around. You're making a good point. It's not like any of this stuff, just because we rally, about 1,500 points on the Dow, is going to go away. These concerns over the trade wars, these concerns over the Fed's involvement, frankly, concerns we have that economic data is possibly slowing. There's probably going to be some earnings compression. So you're right. It's not like just a few days kind of cure these ills, but the reality is this is starting the process of some market healing to where if you've got that long-term time horizon, say, a couple years, 3 years in advance, these are great buying opportunities. I will throw in, too, though, John, that Bears defense is missing somebody like you on it, I think, because they're going to get beaten in the playoffs. And I like the Minnesota Vikings anyway, so I'm getting crushed here.
Scott,
yeah, you had to rain on the Bears parade. I forgot you were a Vikings fan. Yes,
I
you live in Chicago.
He's wearing a purple tie.
Yep.
See that? You got it.
We all know the real football's played on Saturdays in college football. We were talking about that earlier.
Ohio
Scott,
State, yeah.
Yeah, exactly. I'm a huge Buckeye fan, Scott, so thank you for bringing that up. I'll be watching the Rose Bowl. Let's turn to 2019 and IPOs. Could be a record year. We're looking at companies like Uber, Palantir, others possibly accelerating towards earlier in the year. What's your prediction for what IPOs might look like?
Yeah, Marie, IPOs are a good sign of a good economy, a good market, because think about it. If, you and I had a private lemonade stand, if you will, outside of Columbus, Ohio, which I'm from the other side of Columbus. I know you're from the east side. I'm from the west side of Columbus.
Hey,
like, if we had a lemonade stand that was private, that's right, Clark County, Ohio. Here's the thing, though. If we had a private lemonade stand that we wanted to take public, per se, we would do that in a market environment where we thought we could get a good price appreciation, get investors, get interest as far as capital. And so it's a good sign that companies are looking to come to market. However, I think what we've learned from the IPO market is that it's a dicey game. Look at companies that we probably all use, like Spotify. Look at Blue Apron, trading under $1 now. Etsy was one that got destroyed that I really liked for a long time.
Yeah.
There's just areas in the market that sometimes overinflate. So if you're an individual investor, sometimes the IPO, if you're a public investor, is too late to get in.
What about mergers and acquisitions? Do you expect to see a lot of M&A? And I'm asking in the context of some companies, maybe in healthcare, other sectors are more powerful together and they can weather the pending storm, if you will, together. But other companies, and we're seeing that with General Electric and United Technologies, they're segmenting into different businesses. Which way do you see it going in 2019?
Yeah, it's going to be funny. There's going to be like two kinds, I think, Lauren. There's going to be the ones that are M&A out of absolute desperation, right? Companies that need to combine to kind of stay alive. Or there's other ones that are going to be opportunistic. But I'll tell you, the best two areas probably for mergers and acquisitions going forward is probably healthcare, as you mentioned, and certainly technology. Because here's the best part about this sell-off so far. A lot of these companies are getting down to bare basement valuations, in our opinion. So if you're a bigger company that maybe needs an additional aspect to your business and you see a company, especially look in the small cap cap space. I mean, my God, some of these names are down, 30, 40% just from October. You got to start mining that area to see if you could pick up a company on the cheap.
Do you think a lot of these private equity companies, well, they are, I mean, they've got cash, but are you worried that some others won't be able to get access to credit next year?
It's possible. This whole credit thing, though, to me is a little bit overblown. Now, whether you believe Secretary Mnuchin about, making these calls and making sure liquidity's out there and everybody's able to get their money and their access, that's one thing. But the reality is, to me, the credit markets are not really that frozen yet, and they're not showing signs of freezing. And one of the best things that's happened in this market sell-off is rates have started to come down again. And it's not like credit has dried up. Yes, spreads have blown out a little bit, but not terribly so. If you look at how financials have performed, if you look at how oil stocks have performed, crude oil's down big. So it's not yet that crisis mode or any, let's say, indications that there's going to be a crisis mode yet. So I'm not too worried about that aspect of things.
Scott, you got such a wonderful take on the markets. One of the reasons I enjoy listening to you every time I see you on TV. But
thanks.
Besides from small caps, are you staying away from, you're obviously looking at small caps. What are you buying right now? And are you staying away from tariff-sensitive stocks like an Apple, who, if the tariffs get ramped up, could lose their supply chain?
Yeah, John, there's going to be an opportunity, I think, in those areas. We've talked a lot about industrials. I think we've been on a couple shows together talking about industrial stocks because they just got thrown out with the bathtub, the baby, the bathwater, everything in the bathroom, really, because, this whole tariff war thing was really getting accelerated. And you look at companies like Caterpillar, Deere, 3M, they just got totally tossed. And those were good buying opportunities because if you look at how those three companies, say, have performed versus the S&P 500 over the last, say, 30 days, they've been outperforming. So, in our opinion, those are good areas to start looking to pick up because I think a lot of that bad news, John, is already in those stocks.
Let's talk retail. We spent, $850 billion this holiday season, but not at Sears, not at JCPenney. It's deadline day for Sears, bids to acquire the company. They're due in bankruptcy court today, 4 o'clock. JCPenney's 97 cents. JCPenney is a penny stock. What do you make of retail?
Yeah, I don't think that's what JCPenney had in mind when they named the company back in the day. I'll tell you, look, these days, Lauren, you've got to stay on top of your game if you're in retail. I mean, retail is very kind of specialty focused now. I mean, look at some of the new companies that are out there like Canada Goose, for example. That stock has done very well because of their specialty. Under Armour's even come back a little bit from the dead because of their specialty focus. But consumers are fickle. So if we're in retail right now, we're staying away from big box and we own Amazon just because the dominance there. And John knows this too. We've looked a couple nibbles or taken a couple bites at Walmart as well because of their dominance in the space.
Hey, Scott, where's Sienna right now? Because we want to give her a very special shout out. She turns 8 years old today. Happy birthday.
Yeah, thank you guys.
You're
so sweet. There's a picture of her. Yeah, I actually even took that picture. So not only picking stocks, but taking pictures. Yeah, she's at home watching the TV waiting for Daddy to come back home and spend her birthday with her. So happy birthday, sweetheart. She's 8 years old today.
All right.
And we really appreciate it.
You're done with us. Go spend the day with Sienna. Thank you, Scott Martin.
See you guys.